Now, there we go. We're live.
So, everyone, welcome to today's community class. It's going to be hosted by Casper today. It's going to be covering smart money concepts in addition to a couple other things. I'm Nick, kind of just moderating here a little bit, helping him out, but eventually Casper is going to be running the show here. But we can go over the disclaimer real quick. This is our typical Topstep disclaimer. You've probably all seen and heard this. I don't need to read the entire thing. But as we do bring in more and more partners for something that we want to do, just be aware that this is of their opinion. Topset doesn't necessarily endorse, I guess, what they're doing or teaching, but please learn from it. Take notes, write it down, but obviously nothing is foolproof. So make sure you manage your risk here and the trading combine and your personal accounts. But we all know the disclaimer, right? It's trading, it's risky. So be careful out there. And Casper, do you have anything to say as far as disclaimers go? Otherwise, let's rock and roll.
I just hold classic nothing's financial advice and, make sure that you don't expect the same results that I may show in hindsight using examples. And just because, one person like myself can get them does not mean that you can get them because, as everybody knows, the markets are uncertain and nothing is guaranteed.
Sweet. Let's get started. So, Casper, what are we going to talk about, or what are you going to talk about today?
Cool. So, yeah. So, basically, first off, most people already know what ICT or SMC is, or the multiple different monikers that it has that represent it. But basically, the ideology behind this school of thought is to trade with the quote smart money. So when we look at what is smart money or what that might mean, a lot of people they'll say banks, some people say hedge funds, some people say market manipulators, market makers. Now, the way that I look at it is we don't really need to know what or who is behind the market movements. We just need to understand that there is a massive force behind market movements. So, I want you to remember that there is always a massive force behind market movements. And we don't need to get into, the whole conspiracy-esque ideology of who that is or to understand, who the quote composite man or the market maker is. We just need to understand their footprint and how to identify it in a live setting. Because we all can agree that most people in the market are not able to make money because there are a few people that are making a lot of money. So again, most people in the market are not able to make money because there are a few people that are making money off of them. And this kind of goes into the ideology of liquidity and how everybody looks at that smart money. So some people will look at smart money like break of structure and order block and this and that and the easier stuff to understand because that's what a lot of forex gurus will sell you because they want to make money off of course. But what it really comes down to is to look at the markets from the lens of a market maker. And if you're a big player in the market, one of these that we've talked about that is able to make money because of the masses that they're going to quote use for fuel, and that's some people look at that in different ways, but that's the way that we look at smart money is through the lens of liquidity. Now, if we are a larger position, if we're trying to open a very large position in the market, everybody knows there has to be a buyer for every seller. So let's say if you are let's go back over here and look at some of last week's price action on the NASDAQ. So let's say if you wanted to become a seller in this range and there just wasn't enough people buying for you to sell, you're going to need to push the market to where there is buyers, right? Now that could be people covering their shorts, that could be people looking to buy a breakout. And that's going to happen above this high, right? It's the only, and also above each of these highs, right? So above each high, there's going to be, when we went up here, there was some buy side liquidity. For those who don't know what buy side liquidity is, in simple terms, it's just a high. It's an area where there are going to be buyers in the market. So back to the ideology of, being a market maker, trying to think like one, because obviously none of us are market makers. I'm assuming there aren't any of you guys here. I'm pretty sure we're all quote retail traders, which is what a lot of people. I think a lot of people get put off by ICT and smart money concepts because of the esoteric nature of it and the marketing ploys that are used by a lot of the gurus. Smart money, dumb money, all this. But at the end of the day, we're all retail traders, right? So we just have to learn how to think like smart money. So if we're looking to get into a position, we should look for an area of liquidity to be ran, and we want to see a certain kind of structure to confirm this, because everything in trading is just you have an idea, you have your confluences, and then you have your confirmation. Whether you're a retail trader, smart money concepts, harmonics, Elliott wave, you have two parts to a trade setup, and that is, your framework and then your execution. So our framework is to look at the market from a market structure perspective. And a lot of people will just say, okay, that's fairly easy, right? We just have market structure, make higher highs and higher lows. We continue to do this. But what a lot of people fail to understand is not every high or low is going to be looked at the same. So, how do we determine which high or low is going to be respected? So, because a lot of times you might have something like this where you come down, take a low, and then it goes even higher. And a lot of people say, well, Casper, you taught us that market structure is how we determine which way the market's going, right? So, whenever we broke down here, why didn't we continue breaking down? And the answer for that is that this was a run on stops. So, sorry, excuse me. So, if we are looking at the market in a bullish narrative, and we are a market maker, just like we talked about over here. So if we looked at this like a higher high, you ended up real sad whenever you took buys here or here and then, got blasted through. So how do you know when we're looking at the market in terms of, maybe a potential reversal, maybe something like this happening? And the answer for that is displacement. So what is displacement? Now, I don't want you to overthink this. It's exactly what the word means. It's a large move that's displacing the market, right? So for example, we're looking at this range. We have a very big displacement swing coming out of it, right? So that can tell us that that structure is going to be viable in terms of looking for our buys and looking for which way the market is going to move. We'll look at some examples on some old price action first to give you more of an idea of this. Forgive my markings over here. Now, when we look at the market here, and you see a big push, this is CPI day back last September, I think, or no, that was the Jackson Hole. This is CPI, forgive me. But anyways, when we look at this and we have a massive shift down, that gives us an impulse leg. That gives us some true structure to look at, right? You look at this as a viable structure that is going to be respected. Now, when we look at something like, let's say this over here, let's go to ES, it's a little cleaner of an example. So something like this. So see how we barely, you could say that we made a lower low here. We were making, lower highs. I'm sorry, lower low after this high. But this to me, that doesn't look like displacement beyond this low or beyond this liquidity pool. So whenever you learn SMC, I'm assuming quite a few of you guys have learned some of it. If you haven't, market structure is kind of your first thing you learn, and it's the most important aspect of this technical analysis strategy, because everything else you do, whether it's your point of interest like order blocks or fair value gaps, or entry models, it's all going to be in context of market structure, or if you do it successfully, it's going to be in context of market structure. But so many different sources of education fail to truly understand displacement, because if we're going back to what is smart money concepts, trying to trade with the smart money. So if we're looking at it from that example, sorry, I had to serve mute you. So if we're looking at it from that example, we want to understand, or we want to identify areas in the market where we have a big displacement, because if we're trying to trade with big money, it doesn't matter who we think this big money is. We know it's going to be a very massive move. So we know there's going to be displacement in the marketplace. So for example, we look over here, see this full-bodied candle closing beyond these liquidity pools. That is displacement. That tells us the market is reaching higher. A candle wick like this and then forming a swing low, that is not displacement. That is showing us that the market is likely to reverse, because if the market maker were really trying to push the market down further, we wouldn't just spring under this area where a lot of people are getting stopped out, or a lot of people are going to be induced into selling, and then spring back out of it. Because again, if we're looking at this as a liquidity pool down here below this low, and we're a market maker, if we're selling through that, we're not going to see a rebound. But if we are trying to buy, if we're trying to look at the market from a sense of a bullish perspective, then we're going to look to buy these stops. And how can we, the retail trader, indicate that the market makers are indeed buying these stops? A nice wick and a failure to displace beyond this level. Now, this simple concept, I want you to go and test this after this class. This simple concept can help you tremendously. And the ideology that I like to use, or the the kind of mechanical way of doing this is if we fail to displace beyond a level of structure, I then look at the structure that, quote, caused this move as a target. So again, if we fail to displace beyond an area of liquidity or beyond a level of a structure level, then we're going to look for whatever structure sent us there as weak because it didn't do its job, and we're going to see the market draw to it. So this is also called draw on liquidity by ICT, but this is the way I do it. Now, here's another example. So we look over here. The market failed to close above this, formed a swing high by putting in a lower high on both sides of this candle. And then what happens? Where do we go? Right to this low. Right? So back over here, when the market fails to go under this level, what was the high that sent it to us? It's going to be right there. It's the same candle. Where did the market go next? To that high. And this is a little bit of a choppier example, but it's a good one because not all examples that you're going to go try to apply this to in the live market are going to be as clean and easy as this right here or as that right there. But you can also use this, this is on the daily chart, and this is where you would go to kind of determine, are we likely to see a buy day today or a sell day? Because if you're like me, you want to understand what you're looking for. You want to go into the market in the morning or maybe the night before and look at the market for what it is right now and say, am I going to be looking to get short or get long tomorrow? Right? And this is going to help you tremendously do that. And it's very simple. Unlike a lot of ICT stuff, it's very, very simple. So we asked if I'm sharing chart. Yes, you can. Oh, that was never mind. That was a little while ago. Sorry. So whenever we're looking at the market in that context on the daily time frame, we're able to determine our overall bias and look where the market is reaching towards. Because if we understand where the market is going, then all we need to do is look, where do we get in, right? So let's say we are using this on, let's go to a 1 hour, or let's go to a 4 hour. Now, a mechanical way to do it is if we don't get a candle close, but I also want you to look at it, and this is where it gets a little bit subjective between traders. And I try to eliminate discretion as much as possible out of the strategies that I share with people because I understand your perspective and my perspective is different. But this is the way that I look at it, is I have started to look and just say, okay, did we really push beyond this level? So example, here is displacement. Like we can all agree most likely that we displaced beyond this high, right? That's pretty clear to me. It's a big move beyond the high. Now, when we get up here and look at this is where it gets a little subjective. You can say, some people might say that's displacement, some would not, right? Now, how can we add on to our confidence in whether or not something is displacement or whether or not this theory is likely to play out? Because again, nothing's going to play out all the time or 100% of the time. I will say that this plays out extremely consistently though. But we want to always have these backstops or kind of these, a second set of eyes, so to speak, on a different time frame. So if we look on the daily, obviously by now we understand that this hadn't displaced. But we can also go back on the weekly and say, okay, well, what's happened most recently on the weekly? Well, on this example, we had taken out these relatively equal highs right here. So this could give us a potential bearish bias to maybe be a little bit more hesitant to confirm these small displacements. So basically what I'm trying to say is if you have a reason to look for a possible reversal, maybe be a little more picky using this strategy. So in this example, somebody might have said, oh, well, that was displacement. I looked to get long and it didn't work. First off, that's okay. That happens. But second off, you could have maybe prevented it by looking and saying, okay, well, on the weekly chart, yeah, we displaced to beyond this high right here. But at some point, you're going to see a retracement before continuing up. So we'll go into some lower time frame examples of how to use this strategy to actually enter a trade and how I used it to enter 2 trades last week. Now, whenever we're looking at the market from this perspective, and we're talking about this high right here, so we have established, or I had established that, I wasn't looking at this as displacement the upside. I was looking at this as a liquidity rate, which would then lead us to look for lower lows. Now, I didn't catch the move to this lower low, but what this gave us, this displacement we see beyond the lows, see how we push down like that? That can immediately change your bias bearish. So again, even if you didn't catch it on the way up, you see that we are displacing down lower under that low. So if that's the case, you're going to come into the market and you're going to look for an area to get in sells. And whenever I look for sells, and if I miss them in the morning, so I missed them up here, right? We didn't get the top of the day. That's okay. You don't have to get the top of the day to make money. But I look for the same exact pattern down here in the lower time frames. Now, if you're like me and you're trading intraday, I assume you're probably trading a 15-minute or lower, most likely a 5-minute or a 1-minute. That's at least what I trade when I'm trading intraday for entries. So if I'm bearish and I'm looking at the 5-minute, I've already got my bearish bias from the higher time frame. So at this point, I'm going to go in and dissect the lower time frames and look for the same characteristics that I use to formulate my bias. So in this example here, when we come into the market in the afternoon, now I don't trade during the lunch. For the most part, if I'm entering something, I'm going to get in and out of the same day. So I wait till after lunch, which is around 1, 1 to 1:30, and I'm going to look for the same pattern. So again, we're going to look on the 5-minute, just like we looked at we've at this point, you've already looked at the weekly, the daily, 4 and 1 hour. So you're working from the top down because, in trading, the high card always rules. You can have the best 1-minute analysis and the best 5-minute chart analysis, and it's going to mean nothing if you're looking at it in the wrong context, because we're always looking at it in context. The higher time frame, which we have established, is bearish at this point. So when we look at the 5-minute and we've came into the market, we've already seen a bearish day. We saw our normal profit taking through the lunch, and just coincidentally, we look here, what's our most recent displacement? Again, I just want to drill into your guys' head. What's the biggest recent displacement? It's going to be this right here, right? That big leg down, because we can say that this is a move right here, but this is choppier, and you can get displacement helps you see what's pro trend and what's not, because a lot of people get mixed up and just kind of like lost in all of the different ways to look at things. Because people will be like, okay, well, I'm looking at structure from here to here, and that may be on a different time frame, but we're looking at the 5-minute, and I guess I should replay this a little bit, because this is the perspective we had whenever we're doing this. When you're looking at this, the most recent obvious displacement is down. Now, again, what does that coincide with? Our analysis in the higher time frame. So this is how we build a confident setup that we have a high probability to succeed with. That's how I do it. So we have our most recent displacement is down. Now another, I don't want to throw a curveball. This is another ICT or smart money concepts analysis trick. It's very simple, or I wouldn't have added in. You take a fib tool, you have 0, 0.5, and 1. It's premium and discount. So this is something you can add on to your displacements. And if you're expecting a big push down, or if you've seen a big push down and you're expecting that market to continue based on the higher time frame analysis, you can draw a fib, and anything above this line you can consider a premium, and everything below it you can consider a discount, because in the current range we are in, which is this low or this high down to these lows, we want to look at the market as this is where the market's at right now. If I'm a day trader, this is the market right now. So let's use an example. If you have a product in any business and you're looking to sell it, would you rather sell it for a discount or for a premium? You'd rather sell it for a premium. If you have something you want to buy and you're looking to buy that product, you're going to want to buy it for a discount and not a premium. So candles are our product, and this is how we assess our market, is by using these ranges. So if I'm looking to be a seller of my product, I want to do it at a premium. So a lot of people will get scared by this big push up, but since we're looking at it in the correct context, we look at this as an opportunity. Because again, we are looking to be a seller, we want to sell at a premium, and we are looking for the market to give us a signal to do so. So how do we do that? Well, in this example, are we going to look right here at this and look at this as a run on stops? Because again, going back to thinking like a market maker, and this is where so many people mess up with ICT, because they learn all the stuff that we've went over and they forget the whole basis of smart money concepts is to trade with the smart money. But then they will sell into smart money strength, or they'll buy into smart money selling pressure, because they just are trying to catch that top and bottom and they're not waiting for that confirmation. So the way that I confirm is the exact same way that we have confirmed our higher time frame bias, is by waiting for something like this, a failure to displace above structure, because we didn't get that here. What were we getting here? We were getting failure to displace beyond lows. So if we fail to displace beyond a low, again, what's to be targeted? Right here. Right? Now we wait till we have that in our favor. And again, it was at a nice premium. And some of you guys who understand smart money are saying, and it was in an order block, but that's not even needed. It was. But we'll teach some more of these classes. We'll go over some more stuff. I don't want to overwhelm and dump out everything in the book at once. But this is to show you don't need any of that stuff. You just need structure. You need to understand displacement, because displacement gives you everything you need to know. If you're trying to be on the right side of the market, if you're trying to trade with smart money, that's all you need. So once we have developed our bias, which is that, let's go back down here to back to the 1 hour. If we're looking at the market that we have displaced beyond this structure, then what is going to be our target? This right here. That low. Now look where it comes out to be, also on our 5-minute. It's our bottom of our displacement. So we have a lot of confluences pointing to this low. So that is our quote draw on liquidity. That's what the market is drawing towards. So again, just to cement that in your head, we'll throw a magnet down here, because we're looking at this as kind of, price is pulling towards this, but we need to get the signal that price is going to actually start that journey. So what is that signal? It's going to be this lack of displacement on our entry time frame. And this can be on the 5-minute, can be on the 1 minute. I will say that if you're starting this and you haven't done it, I would recommend starting on the 5. So when we're looking at this example, remember we wait for that run on stops followed by a subsequent displacement to the downside. Now you can look at this in the 1 minute and it's a little clearer. And that MSS stands for market structure shift. So a market structure shift, it is probably the simplest pattern in SMC. It is basically just this right here, and it is this lack of displacement. So these dashes you see me draw are going to be showing a liquidity rate. Because again, if we're looking to sell right here, we have this range. We say, okay, I don't have enough liquidity to sell, so I'm going to create some buyers. So anybody who's a breakout trader that's looking to continuously trade this up and they just buy here and then take profits however they do it, they're going to get stopped out if the market doesn't continue, right? So that displacement, this is where smart money has sellers, because they've created it up here, right there, just like right here. And then we push the market down. Now, of course, obviously smart money is not going to take all the profits right there. So if the move is to continue down, we want to see a displacement down to show us that. So once we have that, once we have all of this stuff that we went over with the higher time frame bias, we've established what we're looking at as our drawn liquidity, which is this low. We've established that the market is bearish at this moment. Then we're going to look to get involved using the same confirmation method. So I didn't catch this as soon as it happened. I was kind of watching the market. The best way to do this is you can either mark it on the closure past this if it's a big enough displacement. And this is, again, kind of subjective, but if we look at this, that's a big push through this level, right? So you could have marked it on the close there. And there's something else that you could use called a fair value gap to enter. And a fair value gap is, just see this candle we have a gap between the wicks. Oops. You see how right here there is a gap between these two wicks, and we have a big displacement candle, a big bodied candle. That could have been an entry as well, right? And again, I don't want to overflow you guys with stuff, but some of you guys may already understand what fair value gaps are. There's another one right here as well. Now, another strategy people use is use that premium and discount tool right there, and they could just sell on the equilibrium of it. The equilibrium is the 0.5 level. So if you could just sell from there. There's a lot of different ways to do it, but the way that I did it is I came into the market for my desk and I just saw, okay, we're here. It's not at a perfect entry or whatever. I already kind of gave it, but I'm fine with that. And then I enter the trade and I put my stop above that run on liquidity, right? Because again, that's kind of, if it goes higher from there, we might have been wrong. And you're going to be wrong. That's going to happen. Like 100% is going to happen. Especially when you start out with this. I'm wrong all the time. And as you guys that are successfully trading understand, being wrong doesn't mean you're not going to make money. Being wrong is part of the game. It is a business expense, because all businesses have expenses. If you're running a restaurant and somebody drops their drink and breaks the glass on the floor, you're not going to be upset, because you understand that all the other drinks that you're selling are going to pay for that glass tenfold. And that is exactly how a solid trading strategy works. There's going to be expenses. So Um, we look at this, and basically at this point, you just enter a trade and you look for the market to come down to your level. Should happen same day if you are correct and you're using time on your side, because again, we're looking for it right after lunch. So we have that normal profit taking through lunch, and the market is telling us we're going to go lower. That was a really good trade setup using just that ideology. Now, notice I didn't have to use any kind of fair value gap to enter. You could have. I didn't have to use an order block to tell me to, confirm this trade. You could have, but again, you don't need it. And what is the foundational concept of all of this? Is displacement. And it's very simple. Yet so many people get put off by smart money because they think it's like rocket science, and it's really not. I mean, it can be. It definitely can be. Let's look at another example. So this on Thursday last week, we're coming to the market, and we're looking at the most recent structure. So let's kind of replay again, have some cleaner perspectives. So if we're looking at this and we see what's the most recent structure, right? The most recent structure is going to be this right here. Now we have a big displacement here. But again, what do we expect whenever we're talking about this big displacement? At some point, we're most likely going to go back up to a premium of this. So even if you have this big displacement over here, you're going to still look at what's current. And notice how my target was I wasn't targeting all the way up here because this is a strong level, right? This is not to be targeted. But if we look over here and you look at the market for, okay, well, we have a high and a low right here. So did we fail to displace right here? Yes. Right. So when we fail to displace under that level, we usually look for this high. But this is a very important part of this. Look at the times this was happening. 3 in the morning and at 6 in the morning. We're not looking at that because we're not trading at this time. So what we look for is after this is created, since we saw a run on stops right here with a nice push up, we're starting to see it from a potential bullish perspective. We're going to wait for the market to open. I think there was news that came with this. Let's see, is this Thursday? No, it's Friday. Yeah, there was unemployment claims at 8:30 a.m. Now, you'll notice that this strategy happens a lot of time with news. Now, I want to be very, very, very clear with you. Do not just start going out and trying to trade news. I'm not advocating that at all. I'm telling you to watch and wait for the news, because if you try to use this with news, you're going to end up being, the guy that longed right here and ended up getting stopped out with slippage probably, and then watching the market fly without you. And nobody likes doing that. So do not go trade before news. But if you see this happen after news and get your confirmations and wait for the smoke to clear, that is something that you'll see occur often. So if we look right here, we have a low form. And then with the market, now look what time it is. It's 9 a.m. after that initial push from the news coming out. Look what happens. We come down here, and guess what happens? Right at 9:30, look at the time. We fail to displace. So once that 9 a.m. candle closes, and we have that failure to displace, or I'm sorry, I should say the 10 a.m. candle. And that failure to displace, we are now looking at it from a bullish perspective. So a couple ways you could have done this, and we'll get into some of these more advanced styles of stop loss placement and stuff later on, but you could have waited for the 5-minute to confirm that you're coming out of this level, right, with this big displacement push. You could have longed here, and you could have just said, okay, as soon as this candle closes, long here, stop loss down there, and target it up here. Now, if we notice, it's not the greatest risk to reward there. There's nothing wrong if you have a very high win rate with trading setups with this kind of risk reward, but I like 1.5 or better, and really I like 2 or better. 1.5 is something that I'll use from time to time, but I think it comes with a little bit of experience, knowing yourself as a trader and knowing your strategy if you want to go for those lower risk to reward stuff, because it takes kind of that, again, that high win rate. So if we don't have that, there are other ways we can kind of confirm these levels. So we'll focus on a fair value gap. We'll teach breakers another day, but we have, what do we have right here with this big displacement up? If we're not trying to just market like we were talking about, we have this fair value gap, which is this right here, this candle. And then we have that gap between the wick of this candle and the wick of this candle. So this right here That's a potential buy zone. So remember that change of character setup that we talked about. Right here was we drew it like this for the last trade. Right? So once we look at that setup, we can understand that this occurs on all time frames. So let's go into a 1 minute over here. So let's look at this right here. We have this big displacement down. We'll play it a little forwards. So as soon as we are in the context to look for longs, because we've already developed in the 1 hour that this down here was a lack of displacement. So that gives us our target of the high way over here. Or if you want to be more low-hanging fruit right there. You've got your draw on liquidity, so to speak. These two zones could be target areas. So if you have that on your side and the market comes down into an area where you might want to buy, which is that fair value gap, and fair value gaps, all of the different tools in smart money are the same thing. It's basically just an area to look for a trade. That's it. There's fair value gaps, there's breakers, and we'll do a whole class on all of them because it'll help you guys understand at different, more advanced stuff. But that's the ideology behind that, is just it's an area to trade from. So if we look right here, what do we have right here? We have that change of character because we failed to displace under a low. And obviously all that tells us, if we're just using this time frame, is to look for this high, right? If we fail to displace here, but we're using that with the confluence of our higher time frames telling us that we're just looking for an area to get in and get long. So one could have waited for this candle close right here to, quote, confirm that 5 minute area, long right there with the stop loss right there, and target that. Now that risk reward looks a lot better. I think we can all agree. Or if you're even trading down to here, it's still not the greatest if you're taking that low-hanging fruit. But it's a trade that can make you some decent money and can help you pass your combine. It can help you start paying yourself. And that you hit something like that, you're done for the day. You should be, in my book. I think that it's kind of greedy to go past that. And we'll use the same example. I'll keep it marked on my chart for another day, and I'll teach you guys about breakers. I don't want to give an information overload because I know we've went over quite a lot. So in conclusion, I want you guys to remember, if you're trying to trade ICT, trade with the smart money. And forgive my mechanical keyboard. So how do we do that? Displacement. Without it, you look for the structure to be targeted. With it, you look for a trade. So for example, again, we're looking at, back to the 1 hour. Any of these examples, like right here, we failed to displace under a low, so we're going to target the high that made it because it's weak. Now, again, if we fail to displace, like, see how we had this? We failed to displace here, so this is another target now, because that also, or this also, any of those highs, because they're all failing to create a new low. Now, if we look at this example, did this high fail to create a new low? No, it did not. So let's see what happens once the market got near it, right? So here's another lack of displacement. So what gave us this lack of displacement? This low. So it was targeted, it was displaced through. So then what's the draw? This low. So the only way that the ideology that, the market's going up, it's going to continue up. The only way that works is with displacement. Now on paper, it's really easy to say up, down, staircase to heaven. But you got to remember, it's going to do this sometimes. It's going to clear all of them out. But as long as this right here is just a large wick, all that, then you're still bullish. So remember, trade with the smart money and use displacement. So structure from the top down, and I recommend weekly, daily, 4 hour, and 1 hour for your bias, right? So that's how you get your ideology of where prices, I've said that word so many times, I don't know why I've said that. It's one of those things, but that's where you get your bias for where price is going. And then our entries using this strategy. Some people might say the 15-minute. I'm just going to go ahead and say the 5 minute and the 1 minute because I don't use the 15-minute trading the S&P or the NASDAQ like this. And that's really it. I guess I should have given a background on myself before I started. A little background. I trade 90% of the stuff I trade is going to be the NASDAQ and the S&P. And I've been trading these concepts for a very long time now. And I promise you that if you just take out all of the esoteric bullshit of ICT and all of the marketing ploys that are involved in that space, it can be a very, very valuable tool in your trading plan. So let me that's funny, Neil, bro. Thank you. Oh, hi, what's up? That's one of my people.
Oh, nice. That's awesome.
Yeah,
Welcome. Hi, hi.
yeah. So we'll just do a quick look. I don't want to. We're not gonna get into a TA stream, but we'll look at GC, the same thing as XAU, the futures contract. So do I think it's failed to displace above a hold high in the daily time frame? So let's look at this in context the weekly, because to me that alone doesn't necessarily look like a failure to displace. It does not. Let's look at it in the weekly. So when we look at it in the weekly, we have, and we've talked about this since October with gold. This is a great example of some higher time frame ICT stuff. We called this back in October that it was going to be going to 2100 other charts, 2089 here on GC, the continuous contract. But my bias is there. But again, look at the weekly. We've displaced above this, so we're looking at some point for a retracement down into that discount area. So with that in play, we can look and say, okay, did the market displace here? Well, it's one of those where it's questionable, so I wouldn't necessarily look to long this. We can wait for maybe the 4-hour structure to tell us that we're going to be going down further. So what I would do is wait for something like this and to see if you displace beyond it. And then now you can use that with the weekly to look for, okay, we're going to look for this discount area. So that's all I will go for as far as the analysis stuff. And we'll go over that more tomorrow. Hi. But yeah, so if you guys have any questions, feel free to run them. I'm just hanging out, so no rush. And I can't wait for the next one.
Yeah, Casper, this is awesome. Thanks so much for. We're definitely gonna do a little Q&A. But thank you for keeping it concise. Oops, sorry, and only teaching just one or two things of the methodology. I think that's awesome. There's so much information to take away from the markets and some of these seminars. So, I have a question for you. For anyone who's here, what are some action items that people can take away that they can start practicing with, at least to visualize?
So I would I don't know if you guys have like a back testing software you'd recommend. You can use TradingView. So what I would do is to just test it. So first I'll just remember the theory that, okay, if the market fails to displace peon structure, then we're going to look for the opposing structure. So how about I would just maybe let's do a 4-hour, go to ES. You can just do the continuous contract and rewind to a random date and keep it fair. I can't, a lot of people will do this and they'll like cheat themselves. Like maybe go back to, last year, whenever, and then just start trying to apply it. All right. So say like, okay, you see what I mean? Just that's some good homework you can always do. And if you guys aren't back testing, I highly, highly recommend that you start, because for one, if you like, we were talking about video games earlier. If you like playing video games, back testing is like the best video game ever because you can not with TradingView, but with some actually you might be able to now. You can actually put in an account value, and maybe let's say if you're going for a $50,000 combine, you say put in 50,000 and just treat it like you would a combine, and that's going to give you a lot better opportunity to analyze yourself, to analyze your analysis, and prepare yourself for a combine, and just go back and back test and try to trade with it, and then start breaking it down and stuff like that. And then I'm in here in the Discord too, so you guys have any questions, just tag me, ask me a question. I'm at my desk Tuesday through Thursday trading. So
Yeah, and then could Quantum Defy here has a question if you want to answer that.
yeah. So to summarize, failure to displace swing high or swing low means you target the opposing swing low or high. Exactly. It's precisely. And then if the displacement does happen, you target the next, yes, the continuation. Yeah, you got it.
Cool, awesome. Thanks so much for that, Quantum Defy. Yeah, it's really nice having clarifications on some of these things. And I would agree on backtesting. It's super valuable, and there's so much either free or very cheap backtesting available out there. And it's also really nice to be able to like look at your entry and place it on a backtest, because sometimes when you get your entry live, the entry doesn't feel good, but when you backtest it, maybe it still doesn't feel good, but you take it anyways. And so you can kind of train yourself out of maybe, having negative emotions when it comes to a setup by utilizing backtesting. But that's like almost like an entirely different, we could talk like an hour about backtesting and how to do it. I mean, that'd be actually probably be a pretty cool class, to be honest.
Yeah, we might have to add
Um,
it to the list.
yeah, a little backtesting one. I think that'd be awesome. I think a lot of traders probably have a lot of questions about how to backtest and, how to best utilize that effectively for their trading. So maybe next time we can do a little backtesting session. I think that'd be pretty fun. I'd be down for that.
Cool. Yeah, man. Yeah, I'm all for it. Yeah, and I agree with you. Like you said, like the one of the biggest takeaways from backtesting that a lot of people don't think of is whenever you get into a trade that you're hesitant to take, you'll be able to remember like, hey, I was also hesitant to take this on the paper account, backtesting, because of course you're gonna still follow your system backtesting, and you'll probably do better backtesting than you will in the live market. That's just how it goes because you know money starts flying your decision making, but you want to bridge that gap between the quality loss from backtesting to live markets the best you can. And a great way to do that is, like Nick said, remembering like, hey, I didn't want to take this on my backtesting account, but I did and it played out. Or maybe I didn't want to take like 10 trades, and out of those 10, more of them played out than didn't. And then you're going to be able to do that in the live markets. And yeah, there's a replay video. It'll be posted empty. I'm not sure where Nick will be able to tell you, but
Yeah,
I
we'll
have it.
figure out a spot for it. Typically, we actually have a segment in the Discord called Community Class Videos. We typically post all the videos in there. It's kind of been a barren room for a bit, but we're gonna start populating it going forward. So Han Yolo has some cool videos in there on how to use Bookmap. I have a video in there about the psychology of the trading combine, because I used to be funded with Topstep, so it's kind of like a retrospective for me, which was a lot of fun to do. And then we're gonna add this one as well. Yeah, and Casper, you can download it and obviously add it to your YouTube segment as well. But we'll probably keep it home in the community class video section.
Cool. Awesome. Awesome.
I sound really
I think
muffled.
it sounds good, honestly. I read
Oh, that's
that. It sounds fairly good to
weird.
me.
I mean, I got a nice mic right now. Okay. Cool. Any other questions so we can get from the audience here? Got 47 people. I mean, there's got to be some good questions. If not, we can wrap it up early, I guess, and then everyone can enjoy their lunch. But let's keep it open for another minute or two. Take some questions. What are you looking at for NQ right now? NQ's kind of on the move, so how would you take a look at that?
Let's see, because I don't. So another little bit about me, I don't trade Mondays just because and there's so much stuff that we could go over, man. But there's something called the weekly power of three. It's an ICT thing that you'll see accumulation early in the week and lower probability odds, and then as we roll into Tuesday, Wednesday, you'll start seeing the true direction. Like for example, last week, we saw a nice accumulation here, and then a manipulation, and then the true move of the week. So look for the
So do you
same
skip
thing.
Monday, Friday?
Yeah, I skip Monday. Well, sometimes Friday. Monday is a hard skip for me, for sure.
Huh. Yeah, 3-day weekend. Why not? You're a
Yeah,
trader. Build it in. So you do whatever you want.
right. So here, when I go back and I try to look at the order flow, so again, I want to see Monday's range taken. So I see another breaker, just like we have a breaker here, which is just the last down candle that forms a low before highs are taken that fail to displace. So just like here, last down close candle failing, or I'm sorry, forming a short-term low before failing to take a high, push down, we trade back into it. So the order flow is bearish right now. So I would be probably looking for this to get ran out, and this would be low-hanging fruit. But again, I want to wait for a Monday to form this range. It looks like we're forming a pretty nice one. So here, or you could even mark all the way back to here to Sunday's range, and then wait for one side to be attacked. So for example, if the market comes in tomorrow on Tuesday and we get CPI, because we all know what's going to happen. It's going to be faces melting. So if we
Yep,
melt
madness.
faces this way and then move sharply, that would be bullish. Again, there is no hope predicting CPI. So, but we'll see. We'll see. Like you can get CPIs like it's so weird how I can like remember like almost to the day. I was gonna say the September 13th CPI but that was back here. So you can get CPIs like this. Like so, let's go back, and this is actually a really cool example. So remember we were just talking about accumulation early on in the week. Let's do this. Oh, son of a, hold on. So we were talking about accumulation early in the week. So look at what happened this one. It was a Tuesday. So CPIs are always on Tuesday. So we had a nice little accumulation, right, of this forming, and we took out that high and then got that displacement down. Obviously gave us a bearish sentiment. But the news is very revealing is the point, is you'll see that Monday will accumulate. Usually Tuesday, if we move up into CPI, usually you will see a, and this does not mean to go try to fucking trade this. If people trade like get burned on these days, I don't even feel bad for them because it's like, man, come on, you
Neither do
can't,
I.
you can't do that.
Well, it's funny because everyone, being in the prop firm business, everyone's like, I want to trade news events, and it's like, dude, are you serious?
Isn't
Like,
that
you guys
sad?
really?
That's like a barometer. Like people like, oh, they don't allow news trading.
It's like, yeah, there's a reason why the ladder thins out. It's because all the people that you want to be aren't trading right now.
Yeah,
But
exactly.
you know what I mean? It's
Yeah,
like there's a reason why Topstep had rules to prevent people from news trading. Is because a lot of people would get burned
yeah,
badly, especially on sim too, because you can get some pretty wicked slippage. It's not worth it. But the people spoke, and they want to YOLO during news events.
right.
I wish you the best of luck. I can show you plenty of videos of real life experiences of people trading news events. If you haven't seen the movie Floored, which is about the floor traders in Chicago transferring from pit trading to screen trading, there is a great example of a gentleman who had a position on during a news event. And I can tell you right now that led in his divorce. So, and I believe he was golfing in the middle of winter. So, do what you will with that.
Yeah,
A couple questions
yeah,
though. Awesome. If you want to run through those real quick, and we can try
yeah.
to wrap it up by 12 o'clock, 12:05.
Cool. So, first, Neil, bro, do I look at volume as well, or mainly just structure? I don't look at volume at all. That's just me. I'm not saying you shouldn't or you don't have. I mean, for this strategy, this is exact like as with any strategy. I would, if you want results like that, you would want to use it exactly, as that because I think volume is one of those that it works good with certain strategies. With a lot of strategies, it adds noise, and simple pays the bills in trading. So to answer that, no, I wouldn't use volume. The Burnt Toast said this strat is to help spot pivot points. That's exactly correct, and also just give you a target, right? It's going to help you get a target of where the market's going. Are there any particular forex pairs I would recommend for trading gold, or for trading SMC using SMC? I would trade gold, and you can do that with GC because a lot of people look at gold as forex. I know it's not; it's a metal, but I think the forex community is big on gold.
They
Um,
are,
and so that the gold is a really good one. It moves really violently, but
especially now.
yeah, yeah, no, yeah, for sure. Especially the way the world is right now. Question about NQ today. Where was the draw on liquidity? So if you came in at 9 a.m., and this is something we'll go into a little bit more in depth, you would be looking at overall, we're probably going to make a lower low here and go into there, like I was saying earlier. But coming into the market in the morning, you would want to look for some kind of indication we might go back up into a premium because again, you don't want to just, it's not like you come down here and let's just say if this is our displacement, yeah, the target's here. Like let's say if you came in right, when the market opened, which is I'm guessing somewhere we probably closed somewhere around here or opened. So you wouldn't get in a trade like this, you know what I mean? So the draw on liquidity would be to come back up into a premium. Now you have a breaker buck here, or you have a fair value gap here and a fair value gap here. Now, how would you confirm that is I wouldn't want to sell into this strength right now. So the way that you came into the market, let's say if it was 930, where's 930 at? Somewhere around here. You would wait for the market to start displacing up to tell you you're going to rebalance this range. So if the 1 hour range is bearish, way to trade counter trend, which is a little more difficult, is to wait for the market displacing to tell you we're going up higher, right? And then again, look at this right here. Failure to displace, what gets hit? The high that caused that. So if you're looking, if you've developed the bias that you are kind of bullish on the short term, or this is where people misunderstand. It's like yes, the range is bearish. That does not mean you're going to short from the bottom of the range. If you're trying to trade counter trend and you just can't wait for confirmation of continuation, you would look for the confirmation of retracement, which is the same thing, displacement. And then if you're bullish here and you failure, if there's a failure to displace, as soon as this happens, you could buy right here, put a stop under this low, or even if you want to have a wider stop here and target that high. And that simple trade, you're done you should be done for the day off that. That's a really nice move. You caught that. So hopefully that helped with that. more of a confluence for me than a trigger anyways. Yeah, sure, for sure. The volume is can be, it can help, and again, I encourage everybody to use their own kind of try to like use their own sauce with stuff. But if you, again, like I was saying earlier, if you want the same results that you see, or at least try to get close to them, you got to use the strategy to a T. But take it with a grain of salt. Do what you wish. How do I distinguish the displacement from an actual move? Kind of, I would recommend rewatching the first bit of the video, but basically just this right here. Do we, displace past this? This isn't displacement. That's a run on stops, right? This push up, that's displacement. Would I trade gold during the ICT kill zone of 8:30 to 11? I like gold after like really gold gives a lot of good setups at like 9, like 9:15 because I used to trade gold a lot, but like 9 to 9:30, you'll get this similar characteristics of the stop run with the 9:30 open. But one thing, if you're trading gold, you need to really watch the dollar more than you even watch gold because that's more important than your like if you're trying to trade gold, you should be watching DXY and doing the same stuff we're doing here. You really should watch DXY with everything, but especially gold.
Mm, That's that's good advice. Yeah, there might be another class just on DXY and why you should look at it. So
Yeah,
much content.
there's so much stuff, man.
Um,
I mean, I've taught over 50 classes of this manner, all on different subjects.
that's awesome.
So I have a bunch.
Um, yeah, so we can start wrapping it up here. So Casper, thank you so much for coming in. Where can we find you? If
So
people want more, where are they going?
yeah, so that answers DZF's question and yours. I have a ton of stuff on YouTube. I can either post the link in that little. I don't want to post the link in the community. It's in my bio. If you click my name here, like you click on my me talking, it should come with my profile, and
It's the
then
what, Twitter link or the Yeah, we
uh,
can go ahead and post those links in chat if you want to. Feel free.
okay, hold on one second. It'll be a
Yeah, since you're
YouTube link.
hosting the class, feel free to share anything that you'd like to. It's just
Gotcha.
when
Oh, no, I
yeah,
totally get it.
you know what I mean.
So I'll just post it in community classes to not pollute anything else. So there's my YouTube, guys.
Yeah.
You can watch there. You can ask me questions here in the Discord. On Twitter, I post a lot too. Um, the short form stuff on Instagram and TikTok. Is also TikTok I try to stay off of personally. I don't really, but for YouTube's where you want to go for the best.
YouTube's the main spot, right?
Yeah, for sure. I mean, I
Yeah.
think with everybody, it's like there's a limit of the value you can provide everywhere else.
Yeah, I think most of the best content creators are pretty much on YouTube for trading. So,
Yeah, for sure.
this is awesome, Casper. Thank you so much for coming in. We are definitely gonna have you back. If anyone wants to give us any feedback, whether it be Topstep feedback on these types of classes, do we like these classes? Do we not like these classes? Subject matter, anything, feel free to drop that in the feedback channel, or you can DM me directly. If you have any feedback for Casper and his presentation, I'm sure you can DM him directly. Uh, MT, thank you so much. I would agree. That was a fantastic class. We're going to post it in the community class videos room. So that's going to be underneath the media category. And it should be hashtag community class videos. And we'll get that up as soon as we can. We're going to have a lot of classes coming forward. And personally, I am going to start bringing in more partners to offer more content so we can all start learning and sharing knowledge together and growing as traders. There's a big wonderful world out there full of trading strategies, and let's find one that suits you. Casper found his, he loves it. Maybe other people like Casper's style. We have another class tomorrow actually with Saul. That's going to be on Zoom though, and that's going to be on his home turf. So, like I said, more free stuff is coming for the Topstep Discord. And Casper, huge thank you. Anything you'd like to say?
Yeah, no, first off, thank you, Nick, for bringing me on. And thank you guys, everybody watching the video. I really appreciate the feedback. I hope that it helped. I think that with time, we're going to go through a lot of cool stuff. So I'm really excited to share with you guys. And just always remember that, like Nick said, there's a ton of different schools of thought out there. You just got to find one that works best for you, that you can find a confident belief in, I guess you'd say, or a confident conviction with, and just hammer it down. Like just focus on one thing. A jack of all trades, a master of none, especially in trading. So on that, I appreciate you all a ton, and I will see you guys next time.
Awesome. Thanks so much, Casper. Everyone, have a great day. See you all tomorrow.
See you guys.